Hey, it's Wheeler here again. So, one question I get asked a lot about is fees, right? It seems to be the number one question probably in this industry is fees. People are worried about how they're getting charged or making sure they're not getting taken advantage of, which is perfectly fine. I will say this or preface it with this: I wouldn't make my decision on who's helping me based on fees alone, but it certainly is important. I do realize that. So, what I'm going to do is talk about the two main ways financial advisors charge and then tell you how I charge. So the two ways, first way is fee-based. Fee-based, long story short, means commissions. For every investment that person sells you, they're going to get a commission. Typically, it's a small percentage of the overall investment. So if you, let's just pick something out of thin air, let's say a mutual fund, and you pay $100 for a mutual fund, typically you're going to pay about 5% up front in this example. That $5 is going to go to the mutual fund company. Out of that $5, the mutual fund company is going to give some of that to the financial advisor. Okay, different mutual fund companies have different rates. There's some that don't charge anything up front. There's some that only charge 2.5 points. There's some that charge over 5%. But typically, that's the range you're looking at. And then after that initial charge, there's what's called a trail or a small fee after that every year based on the amount of that $100. So that could range anywhere from 10 cents on the dollar up to a full dollar or maybe even more. So meaning 0.5% up to 1.2% of that $100. So typically that strategy is kind of buy and hold, or at least you want it to be on the mutual fund side, meaning that if you're going to buy a mutual fund, well, if you paid in that example 5% up front, and that mutual fund's only generating about a 6 or 7% return for the year, well, then you're really only up 2, maybe even 1 after you factor in the trail of the year. So typically with those types of investments, you kind of want to keep them for 4 or 5 years. You don't want to do what's called churning or moving them back and forth because you're just going to be paying a lot of commissions. Again, not a bad thing, but you just want to be cognizant of that. So typically on long-term investment stuff, if you will, fee-based means you want to kind of buy and hold that investment for a substantial amount of time. Typically, in my case for clients, it's typically 4 or 5 years. We try and hold those investments. Okay, so that's fee-based. Then that brings us to fee only, right? So fee only means you're going to pay a small percentage of the overall assets under management with that financial advisor. So in another example, let's say there's $100,000, right? And the advisor is charging 2%. So out of that example, then the advisor is going to charge you $2,000 on a yearly basis based on that $100,000 that you have with them. So the better you do, right, the more money that advisor is going to make. The worse your portfolio does, the less money that advisor is going to make, right? So if that 100,000 turns to 200, well then 2% of 200,000 is more than 2% of 100,000. Conversely, if your 100,000 goes down to 50, 2% of $50,000 is less than 2% of 100, right? Simple math. So what's the deal? The deal is there's incentive there for that financial advisor to make sure your portfolio performs optimally. Not only that, typically on those fee-only platforms, they allow you to have a much deeper and broader breadth of investments that can be actively managed, right? Meaning you have several different mutual funds and several different families, and it's not going to cost you anything more, right, than only having 1 or 2. You're just able to have a much more diversified portfolio for the most part. And every time that the financial advisor rebalances or you guys change your risk portfolio and go from a risky portfolio to a more conservative one over time, that you're not going to be paying a lot of commissions on those trades. It's all covered in that flat percentage fee. So those are the two ways you charge. As far as me, majority of my business is fee only, but there is a minimum involved. And for those that don't meet the minimum, I do fee-based, especially for those just starting out. But either way, what we do is we take a look at you and your scenario and make sure we pick the account package and the fee package that's the most optimal for you and allows you to help meet your goals. So hopefully that helps explain fee-based and fee-only and tells you a little bit about what I do. And feel free to shout back with any questions, drop me an email or shoot me a note. Thank you very much.